All right, welcome everyone. We're going to start. Welcome to all of you, and thank you for joining us tonight for the this week's edition of Now You Know Speaker Series, co-hosted by UJA and the Jewish Foundation. For those of you who don't know me, I'm Ronit Holtzman. I'm the Senior Vice President, Philanthropy, Plan Giving and Endowments. And if you are listening to this as a recording, please note that all the information here is as of April 12th, 8 p.m. Eastern Standard Time. Thank you. We really appreciate at UJA everyone's support now more than ever as we take stock and determine both the immediate and long-term needs that will allow us to come through this crisis. Our UJA community has really risen to the occasion. 600 volunteers have already made more than 13,000 wellness and check-in calls, with more to come. An additional 200 volunteers continue to purchase and deliver groceries to those in need, and we've packed roughly 1,800 Passover food boxes and delivered them to the most vulnerable among us. Every day, more volunteers sign up to help, so thank you. And if you are interested in helping or getting involved in some way, please visit jewishtoronto.com. I'd like to take this opportunity to thank our sponsor, Scotiabank. We are overwhelmed at the willingness of our sponsor to stay with us and want them to know that this relatively low-cost event ensures that even more of their generous funds are supporting the needs in our community. Before I turn this over to our speakers, I just want to note that this session is being recorded and will be available on jewishtoronto.com. We hope you'll join us for the next Jewish Foundation and UJA co-hosted Now You Know, April 22nd, so mark it down. The topic, the stock market, and what to do in these uncertain times. It is my distinct pleasure to introduce tonight's terrific speakers. Ali Spinner, a partner in Crowe Soberman's Tax Group, and Robbie Handelman, Vice President, Tax and Wealth at Fiera Investments. Both Ali and Robbie are involved with the community. Tonight's presentation is just one of the many ways they give back. Thank you. Robbie?
Hi, everybody. Thank you for that, Ronit. Thank you for joining us this evening. These are, of course, uncertain, uncomfortable, scary times, and I'd like to start off by wishing everybody our best. The purpose of the webinar this evening is to help the community understand what government benefits are available in light of the COVID-19 situation. There are some benefits available to individuals, and there are some others available to businesses. And we hope after the webinar this evening, each one of you has the information available to better understand what support you can apply for. We don't want to replace your professional team, your accountants and your lawyers. And although there will be questions at the end of the presentation, I'm going to try and take the easier ones and leave Ali with the harder ones. But your personal circumstances, we may not be able to address all of them. As a matter of disclaimer, Ronit already mentioned that this presentation is current as of this evening, Sunday, April 12th. Government is constantly making amendments and changes to the rules and regulations, and just be aware that that may happen as early as tomorrow. We're also not going to make any statements political in nature as to whether or not the assistance is sufficient. We'll leave that up to you guys to decide, rather to really explain what's available. So at a high level, what we're going to try and answer tonight about each of the benefits are three main themes. Firstly, what amounts can you receive monetarily, quantifying that to a nominal dollar value? How do you qualify for that amount or to make such a claim? And where do you go if you want to make that claim tomorrow? You want to action on the idea. How do you get started? So as far as individuals are concerned, there's about 6 different topics that we'll be going through. Changes you can see on the screen here, everything from tax filing dates to some dollar benefits available to you, EI and the CRB benefit, CERB benefit, Canada Emergency Response Benefit, CCB, GST credits, and some Ontario support for families. Ali, did you want to say anything on regarding the businesses? I know you'll be spending some time on that.
Sure. Once we've gone through the individual support measures, Robbie will be talking about the individuals. I'll be talking about the business support measures. We're going to talk first about tax filings and payment deadlines for businesses, corporations. as well as different wage subsidy options that are available. The temporary wage subsidy, which is the 10% subsidy, and the CEWS, or Canada Emergency Wage Subsidy, which is the big one, the 75% wage subsidy. We'll get to that. We're also going to talk about the CEBA, or the Canada Emergency Business Account, which colloquially is the $40,000 loan that you may have heard about. So we'll get to all of those as well.
Yeah, we've seen a lot of, thanks for your questions. We've seen a lot of them, and a number of them have related to these topics. So we're going to really be picking out his brain on those, and look forward to a good discussion at the end. So in the interest of time, I'll get started. And the first benefit that I'd like to overview is a change that the government has made, or leniency to help people with their tax filing deadlines. So for an individual who's normally filing their tax return, their T1 return, an individual T4 employee like myself, that is due on April 30th under normal circumstances, but that has recently been extended to June 1st. You should note there is, on the middle slide, a slash and another date. That's to represent those who are self-employed. That date is ordinarily June 15th for self-employed individuals filing a T1 return. That has not been changed, so it is still due on June 15th. As far as paying the balance owing, so if you do have a balance owing on your return, ordinarily that's due for a T4 employee on April 30th. That was extended to September 1st, and for a self-employed individual, June 15th, also extended to September 1st. As far as tax installments go, if you are in a position where you have to make tax installments, those were the most recent installment, or the latest upcoming installment that would have been due on June 15th has been extended to September 1st. Obviously, these are all 2020 dates, so we're in the same calendar year.
Robbie, I just want to add one point there. A question that I've been receiving quite often. The March 15th personal tax installment was due March 15th. So if you haven't made it, you should still go ahead and make your March 15th payment. But just as you mentioned, the June 15th payment will not be due until at least September 1st.
Yeah, that's a good point. Thanks for that, Ali. So the first real benefit, or sort of dollar benefit that we wanted to discuss was EI. The reason we want to lead off with EI is because EI is really the foundation for the other government benefits that you're going to be talking about, or the one that's been most publicized for individuals. EI and the rules that govern EI were largely used in crafting the CERB benefit that we're going to be discussing later. So if you were to have applied for EI or qualify for EI, ordinarily you can expect to receive the lesser of either $573 per week, which would be really your dollar value maximum, or 55% of your average weekly earnings. And that amount you see in brackets, actually, there is an ability to have a higher kind of earn-in rate to your EI if you qualify for a family supplement, which is based on an income test. Payout periods do range in various jurisdictions, depending on how difficult it is to get employment. For the purposes of Toronto, we assume people are calling in from Toronto, it's 36 weeks that you can qualify for. Remember that these government benefits, many of them are actually taxable, EI included in that. So the amount that you do receive, there is an amount owing in your following year's T1 return related to that receipt. Now, and Ali brought this up, and this is an important point to understand. The government is obviously in this day and age inundated with applications for people who qualify for EI, and we'll get to the qualification final slide. And they've decided to direct everybody to the CERB application. We'll overview that as the next benefit, but right now, if you haven't applied for anything and you would like a benefit, you're going to be receiving CERB. EI will be available if CERB expires or you run out of CERB, but for the time being, any new applicants are going to receive the CERB. And when we overview the CERB, you'll notice there are some differences, both in terms of the duration, the way it's paid, and the dollar value. So in some respects, it's better, and in some respects, it's worse. So ordinarily, if you were to apply for EI, how do you qualify for such a claim? Well, first and foremost, you need to have been employed in what we call insurable employments. That meaning you have to really be on the books. EI is deducted from your pay. You're not receiving cash under the table. And another key theme is that you've lost your job through no fault of your own. You've lost your job not by quitting your job, but you've been let go or laid off, or your company is dissolved and they can't employ you anymore. A key feature of EI that's also different from CERB is you still are actively looking for work and willing and capable to work each day. That's not really a test that they're looking for anymore in CERB. There is a blackout period with EI, 7 consecutive days without work or pay, and we'll see with the new benefit that that's actually been extended. You also have had to work a significant amount of insurable hours in the last 52 weeks since the start of your claim. And again, that also varies and fluctuates jurisdiction to jurisdiction. It's 700 for Toronto. For those that it may be relevant, the family supplement that we discussed on the previous slide would be earned, or you would qualify for such a supplement if your family income is below approximately $26,000, and you also are receiving the CCB benefit, the Canada Child Tax Benefit. So assuming you wanted to apply for EI, ordinarily someone would go online. The government offers a website where you'd fill out all your information. There's a telephone reporting service for those who prefer that route, and you can start receiving benefits immediately. You do need a record of employment to prove eligibility for EI, and that's something we'll contrast in the next benefit. And there is actually a clawback mechanism, dollar for dollar, when you earn income during your collection of EI. 50 cents for every dollar you earn of EI is clawed back. So that's important to note and kind of lay a foundation to understand what the government's now done with their CERB benefit. So the CERB benefit has been largely publicized in the media, and this is what the government has been advertising as an immediate response to some of the COVID-19 layoffs that have been happening. And they're not in response to only layoffs. People that have been forced to quarantine themselves or leave their work, maybe not for the purpose of a permanent layoff, but something maybe more temporary in nature, that still would qualify. So the amount that we're talking about here is a $500 per week amount that's actually paid in 4-week increments, so a $2,000 payment. Right now, they're talking about a 16-week period of time, with which this benefit would apply, but of course that can be extended. Similar to our traditional system of EI, the benefits and the payments are taxable to the recipient. One thing that's important to note as we'll discuss the CERB benefit is, although this is money being paid out, this isn't free money for people to just grab. And Ali is going to talk about this more when we discuss some of the corporate benefits. But if you don't qualify for this, please don't apply for it. There may be penalties and significant ones for individuals, and the government is rushing to issue these payments to families and individuals who do qualify, realizing that they need the money today, that there is a need immediately, and don't misconstrue that for a free handout without consequences. There will likely be consequences if you don't qualify. So those qualifications that would entitle you to CERB again are similar to EI. The first one is a simple one of double dipping. You can't apply for EI and CERB and get both at the exact same time. That wouldn't be fair to the system. You have to reside in Canada, or at least 15 years old. You've stopped working because of COVID-19. So again, that's not, you haven't voluntarily left your job, you haven't quit, but you've stopped working. So maybe you've been laid off, or maybe you've been quarantined, or you're sick and capable of working. You have to have had a total income of at least $5,000 in 2019 or the preceding 12 months. It's very different from EI. You're not, it's not a amount of insurable hours test. And this isn't actually a dollar for dollar test based on the amount of income that you're earning. So for a lower income individual, you might actually receive more through CRB than you would have through EI. But as we'll see, as we saw, the cap is $500 a week, which is lower than the ceiling for EI, which is 570. Total income, and also sort of to add one more point, no employment income was earned in the first 14 days consecutively of the first benefit period. And that's a really important distinction. When we talk about no income, we really mean zero no income. So that doesn't mean that if you've had a reduction of your income, even if it's been significant, if you were a commissioned salesperson and you went from making 75,000 to 10,000, well, you still have income and you would not qualify. If you were a medical practitioner and you had a significant reduction in income as a result of this, but you still have some income seeing some patients, you would not qualify. So that is potentially a shortcoming in this measure, but you absolutely cannot have any income.
Robbie,
yeah, go ahead, Ali.
One point I wanted to add there, and I've had this question quite a bit in my practice. People are asking if their children can claim CERB, specifically if their high school or university age children can claim CERB, because they otherwise would be looking for a part-time job, or it's time to start looking for a summer job, and they're asking the question. And the answer for now is no. The answer is that those individuals right now, they have not stopped working because of COVID-19. And also they are not otherwise available to work. There's still many students, as I understand, who are in school virtually, and it's not the end of exam period for some of them. So I just want to make it clear that CERB is not meant for students who are looking for work and who've not been able to find a part-time job. That's different. The government has said that there's going to be, it's beyond the scope of what we're discussing today. There are going to be certain programs. For example, the government's recently announced they're going to cover 100% of the cost of one of the summer internship programs that they have, where they encourage employers to hire for the summer. But keep in mind that CERB is not intended to be claimed by high school or university aged kids who otherwise fit the criteria, but in this case, they would not have stopped working because of COVID-19.
Yeah, that's a good point, Ali. Thank you for that. One other clarification in case it's not clear, this applies to both employees and self-employed individuals. And for the purpose of a self-employed individual, we did see a couple questions come through wondering if that $5,000 is gross or net income. And although the government hasn't clarified yet, likely the purposes will, as consistent with how they've dealt with similar measures would be on a net income basis. So that's important to be aware of. So if you believe you do qualify for this and you would like to apply, it's as simple as logging into your CRA My account. If you've never done that before, it's not too difficult to create an account. The government is processing this very quickly, and I understand they're approving all applications. My understanding is they're approving all applications immediately, and if they need to do audits, will be doing so retroactively. Then you could report via telephone service if that is easier for you. You don't have access to My account. This is something that you do need to reapply for every 4 weeks if your situation continues. So unlike EI, where it remains in place for a much longer period of time, here you actually do need to go back in the system and recertify that you've met all the qualifications and conditions, and go through that process on a manual basis. And again, as another matter of distinction between EI and CRB, if you had applied for EI before the March 15th deadline, your EI will continue throughout this period of disruption. And if it ends during the period with which CRB is offered, you can apply for CRB afterwards. And vice versa, if you have applied for CRB and it's after March 15th, but your situation continues after the expiry of this program, you could apply for EI. So the two are mutually exclusive, cannot overlap, but if one expires, the other could be available.
Robbie, I just want to answer one of the Q&A questions. There's a number of Q&A questions that have been coming through on this point.
Sure.
One that's important, and it says here, can a university student claim CERB if they've been working part-time through the school year and had to stop working because of COVID? In that circumstance, my gut tells me yes, that if they did have a job that they were holding down while they were in school and they've had to stop working because of COVID, that in that case, it appears that they would qualify. Again, I qualify that based on that's my gut initial reaction. I would go through the application through my account very carefully as you're filling it out to see if it specifically makes a comment there. The next question that I'm just going to respond to quickly, it says, would a housekeeper or nanny who is paid in cash, i.e. off the books, qualify for the CERB? So that's a question I've heard many times. Many housekeepers or nannies, especially part-time ones, are paid and withholdings are not made. So that's a question that really the nanny or housekeeper themselves is going to have to make that determination. Often I shouldn't say the employer, but often the person paying the cash doesn't know if the person has declared any income on their return. And for example, one of the comments is you must have made $5,000 in the prior year in order to qualify for CERB. So assuming that the individual has declared some income, hopefully they've declared all of it, but assuming that they've declared some of their income, at least $5,000, they would qualify for the CERB in that case. And then the last one I'm just going to go for now, and then we'll get back into it. Yes, it talks about the CRA My Account, and it makes a comment here that the process to get one does take some time. What happens is if you apply for My Account and you've never applied for it before, and I encourage everybody to make sure that they do apply for it, what happens is that they have to mail you a special code in the mail, and it does take about a week to get that code. If you want to make sure that you get your CERB quicker, there's a phone number there that you can call, that you can speak to someone. So if you can get through, so that might make it quicker. Otherwise, I would encourage you to apply for My Account as quickly as possible.
Great, thanks, Ali. Keep the questions coming. We're happy to answer them. And there are a number of questions regarding nannies, and we do have to say that, willfully paying your nanny in cash during this period so she can claim CERB does qualify as fraud. So we're not going to tell you to do that, but ultimately you guys can decide whatever you want to do. And we'll proceed to the next benefit. So the next benefit here is CCB, and mostly we put the slide in, it's intended for people who largely already receive CCB. If you don't receive it, you never heard of it before, it may not be of relevance to you, but those who are receiving it, the government has increased the amount available per child by $300 for a one-time payment of the 2019-2020 benefit period, scheduled to be delivered in your May CCB payment. For those, again, not familiar, CCB is an amount that you do receive if you have children that live with you under the age of 18 and are within your care. You're primarily responsible for taking care of them and your family income. And it is an income tested benefit, so it does start to get clawed back once income rises beyond $30,000. So that's a nice kind of little one-time benefit. Some more benefit is available as a GST tax credit for, again, for some individuals who qualify. So this is also intended for those who receive it. You should know that your credit has been doubled for the 2019-2020 benefit year, approximately worth $400 for singles and $600 more for couples, will be delivered starting April 9th. And again, that's also an income tested benefit. This is something many seniors apply for and are eligible for. And something that in answering some of these questions, what of the benefits that were discussed are available to seniors, and truthfully and unfortunately, most of the benefits are not available to seniors. The government has made some amendments to the minimums that you can withdraw or must withdraw from your RIF, but largely the benefits we just discussed are available to individuals who have employment income, and that's maybe a shortcoming. This GST benefit, though, may be something that those individuals could qualify for. And lastly, for individuals who do have families, this is something that anyone really who has children can receive. It's not an income tested benefit. The Ontario government is offering support for families in the amount of $200 for children aged 0 to 12 and 0 to 21 with special needs would receive $250 payments. You don't need any income requirements to qualify. As long as you are the primary guardian or caregiver of that child, you would qualify. And I know I filled out the form myself for my daughter. It's very simple. The link is posted below, and you can fill it out with relative ease.
One comment there, just based on what's coming in. There's a question here. It says, so a housekeeper wife has no benefit from the GST credit. And the answer would be, it depends on the income of both spouses. The test for GST credits are based on family income. So it wouldn't be based on just one spouse or the other. It'd have to be taken into the whole. And there's one other point I want to make just on the previous slide again, Robbie, with respect to the GST credit. One thing, it says to qualify for the GST credit, you must be at least 19 years old. There's an important point here that I just wanted to bring up. Make sure that your children who have turned 18 in 2019, make sure that they file income tax returns for 2019. Even if they have no income, or they had a small part-time job and they don't owe tax and they otherwise wouldn't have to file, you have to keep in mind that the only way that an individual can benefit from the GST credit is if they actually file a tax return. And oftentimes I'll have new clients come in and they'll have children who are 25 years old and they'll say, oh, they've just been in university, they've never had a job, or they've never made more than a couple $100 a year, they've never filed. It's important to go back. You can go back and file for up to 10 years actually, and the government will send you all of the GST credit money that was owing to you for those years from the year that you had turned 19 years of age. So please make sure they can use a free tax software or a very inexpensive tax software online to file a very basic, simple tax return. But the only way for them to get their GST tax credits is for them to actually file a tax return.
Great. So in the interest of time, why don't we, I know there's still some unanswered questions and we'll do our best to get back to them. Ali has some important slides to go through on benefits that pertain to businesses. So why don't we dedicate some time to that and we'll circle back at the end. So Ali, I'll turn it over to you.
Okay, thank you. Excellent. Okay, so I'm going to hopefully make some complex concepts easier to understand. So the first item here we just wanted to mention comes down to due dates for the filing of tax returns, corporation tax returns, as well as payments. So the first point to note is that for any corporation that had, sorry, if I'm looking at the side, I've got some notes on the side here. For any corporation that had September 18th to November 30th year ends in 2019, and it shows on our slide that the regular due date of that corporation's tax return was March 18th to May 31st. Those due dates are now extended to June 1st, 2020. That's important to know. As well, what some might say is even more important is that if you have a balance of tax under Part 1 of the Income Tax Act that would have been due between March 18th and May 31st as well, that Part 1 tax, which also includes corporate tax installments, is now not due until the earliest September 1st. So what the government has said is they've said that these taxes will be due after August 31st, which is why we're saying September 1st. But in fact, it may actually be later than September 1st. And we expect that the government over the summertime will explain that. A couple other items of note is that with the deferred income tax, it's only with respect to Part 1 income taxes. It's not with respect to Part 4, or Part 6.1 income taxes. Part 4 you'd see more often if you've got investment holding corporations. Another point I want to make, it's not on the slide, but GST payments. If you had a GST payment, if you're a monthly filer, your February, March, April, and May GST payments, which would normally be due 1 month following. So again, your February, March, April, May GST payments are not due until June 30th, 2020. Another question I get a lot from people is they say, well, I'm just not going to file my source deductions. I'm not going to pay my source deductions for my employees into the government. And that one is liability, and you don't want to have really enough time, so make sure you do that. Perfect. Okay, so now we're going to talk about the temporary wage subsidy for employers. This is the 10% benefit. So there's two benefits with respect to wage subsidies, the small 10% one and the very large 75%. So the small 10% one was announced by the government first. And effectively, I'm just reading some notes here from the government, the 10% wage subsidy is a 3-month measure that will allow eligible employers to reduce the amount of payroll deductions required to be remitted to the Canada Revenue Agency. Effectively, what was happening here, so the amount that your business can receive can be 10% of the remuneration that you otherwise pay to your employees for a 3-month period, March 18th through June 19th, 2020. There's a limit of $1,375 per employee and $25,000 per employer. So what this means is that, and I think we'll get to it in the next slide, but I don't want to turn yet, effectively 10% of the wages that you pay to your employees, if you're an eligible employer, you will receive a subsidy from the government. And the way to apply for this, there actually is no application at all. The way to receive the benefit is you would simply compute in each of the periods, or from the March 18th to June 19th period, you would compute what your qualifying amount would be. You would come up with a number, and then you would simply take that number and reduce the amount of income tax that you would otherwise be sending to the government as source deductions. What's key here, though, is that the government has said you cannot reduce your CPP or EI remittances. It must come from your income tax remittances. And what the good news is that they have said is that if your income tax remittance for the period is not high enough to obtain the benefit, you can continue to deduct money for the 10% wage subsidy from future remittances. I will say there's a lot of information here. It's it's complex. The CRA website or the Government of Canada websites do spell out these programs in very plain English, and I find it quite easy to follow. So certainly if you're looking for more detail, you can see that there. What's also important to note is that the amounts received by the employer as part of the wage subsidy will be taxable income to the employer. So on the next page, we talk about who a qualified employer is. The 10% wage subsidy has a tighter requirement than the 75% wage subsidy that comes up. But you must be an employer such as a Canadian-controlled private corporation, a corporation that's eligible for the small business deduction, a sole proprietorship, a partnership with certain partners, a not-for-profit, or a registered charity. So one of the interesting items that qualify for the 10% would be nannies, housekeepers, or caregivers. Those individuals, although it's not necessarily obvious to them, you can still be an individual employer who has a nanny, and you would be able to qualify for the 10% wage subsidy. And again, you would compute the amount that you pay to the nanny, and you would deduct that from future remittances that you make to the government.
If I may, Ali, to address two questions that have come in regarding this subsidy and
sorry, there's one important one. It says, it looks like this one's important. It says, must we pay source deductions on time? The answer is yes. You absolutely must pay source deductions on time. Sorry, go ahead, Robbie.
So So a couple questions. Firstly, as some of you pointed out in your questions, this benefit is one that does not have also an income test, or doesn't test if your business has been harmed a certain amount during this COVID-19 situation. So whether you've had a drop in revenue or not, you still could qualify for this. You don't see that as one of the qualifications. Another question we had was an interesting one that I may not have the answer to, and maybe Al, you can opine on, is how is the government going to pay for all this? We've already covered a lot, and now we've added on this, and we haven't even added the biggest one that you're going to go into shortly. And is that going to result in higher capital gain inclusion rates or taxes going up? I have no idea. I guess taxes are probably not going to go down. I don't imagine them going up, but that's an interesting question. So thank you for that one.
Yeah.
Okay.
Excellent. Okay, so now we're going to talk about, this is the big one, the Canada Emergency Wage Subsidy, or CEWS. This is the 75% benefit. So what's interesting here, and I guess I'll give a little bit of backstory and a little bit of insight into this before we get into the detail. Hopefully my computer doesn't freeze again. So when this all started, when probably around the second week of March or so, when the government came out with a 10% wage subsidy, obviously they recognized that employers were going to have difficulty making ends meet in order to pay salaries. And the government came out with their 10% wage subsidy that we just went through. And as many employers will tell you, myself included, a 10% wage subsidy simply isn't enough in order, when you're worried about making ends meet. It's not going to be enough to be able to keep significant amounts of people on payroll if your business is facing declining revenues. We saw in many cases, we saw very large corporations laying off tens and tens of thousands of employees. Air Canada is one that comes to mind and will be important in a minute, where companies looked and said, we can't afford to keep these people on our payroll. We don't have the revenue coming in, and we have to do temporary layoffs in order to cut our losses effectively and consider the longevity of the business. So the government has come out with the Canada Emergency Wage Subsidy. It actually passed legislation in the House of Commons yesterday. This was the emergency in-person sitting that they did yesterday, and it did receive royal assent last night. So it is now law. And the government's message, the reason that they brought this out, and this is a $73 billion package, it's absolutely massive, but the subsidy aims to prevent further job losses in the Canadian marketplace. And it's really encouraging employers to rehire workers that were previously laid off as a result of COVID-19. And it's interesting, when the government came out with this new plan, and they talked about some tweaks, which we'll get into on the next couple of slides, Air Canada actually made an announcement that they actually had brought 36,000 people back onto payroll at the same time. Presumably the entire payroll is being paid for by the government of Canada. And I assume that the economists in the country have determined that it's better to have that money trickle back into the economy and keep it going. Again, all political views aside, how we're going to pay for it, Robbie, I don't know. But effectively, this is a measure that's to encourage people to bring employees back onto payroll. And as well as they want to have Canadian corporations set that when we resume normal operations after the crisis, those employees are employed. The other message that the government mentioned is that they wanted employers to rehire employees as quickly as possible and to apply for the CEWS benefit if they're able to. Some people say it's too little, too late. Other people say it's still not enough to keep the businesses going and layoffs will happen. However, let's get into the meat of the CEWS. So the way that the CEWS works, again, this is really a benefit again for the business, for the employer. From the employee's point of view, their situation may not have changed. But what the government is doing is the government is going to cover or repay back to the employer up to 75% of the remuneration paid to the employees, up to a maximum of $847 per week. There are 3 claim periods, a period that laps March, April, April, May, May, June. If any amount is claimed under the temporary wage subsidy, the 10%, then that will reduce the amount that you can benefit for under the CEWS. And it's also not available if your employees are currently claiming CERB. So if you had to terminate employees and they had to, or if you had to lay them off and they were claiming CERB/EI, but CERB, then you can't now go back and you have to rehire them in order to claim CEWS.
No double dipping.
Pardon me?
No double dipping.
No double dipping. No, definitely not. And again, the amounts that you'll receive are taxable to you. Okay, we're going to flip the page. Okay, so this one is interesting because it says, how do you qualify to make a claim? So you have to be an employer that, now you may remember for the 10% benefit, you had to be a Canadian controlled private corporation, but to be an employer for CEWS, you just have to be a taxable corporation. That's going to capture a much, much broader range of businesses, including public companies. There's taxable corporations, sole proprietorships, partnerships with eligible partners, not-for-profits, registered charities. I'm sure there's lots of questions about incorporated professionals, incorporated doctors and dentists. I'll get to that in just a minute, because the answer is yes, you can likely qualify from CEWS. You had to have paid remuneration to employees in Canada. And then the next point here is absolutely key. This is the key. Not everybody is just going to qualify for CEWS. The businesses that are going to qualify for CEWS have had a substantial reduction to their revenue, their year-over-year revenue in the periods of March, April, or May. And when the government first came out with this, it was a little bit too generic, is the word I might use. They had indicated that you needed a 30% reduction in year-over-year revenue in each of those months. They have now tweaked that, and they have come out and they've said in March, it's a 15% reduction, and in April and May, it's a 30% reduction. And Robbie, I'll ask that you switch to the next slide, and then I'll come back to some other points just on the revenue piece. So this is a very important point here, is that this is the new revised legislation where it shows for each of the different claiming periods where you have to look at your revenues in comparison. So for example, let's look at the first line, period 1. The claiming period is March 15th to April 11th. You need a 15% reduction in your March 20 revenue, and you have a choice. You can compare that March 20 revenue over March 2019 revenue, or the average of your revenue in January and February 2020. So this deals with certain businesses that have had certain events happen where their revenue may have been out of whack or not. So this is a very welcome change, as it hopefully will allow more businesses to be able to be captured. One other point I want to make here is that typical revenue, a couple points, is that typical revenue here is going to be revenue in Canada earned from arm's length sources. So third-party revenue. Revenue would be calculated using the employer's normal accounting method and would exclude extraordinary items and amounts on account of capital. And of course, each business, I'm sure there's going to be lots of questions, but each business is going to have to go through the legislation, work with their advisors to determine exactly if they qualify or not. And the other very, very, very important piece is that the government made a change where each business is allowed to use either the accrual method of accounting or the cash method of accounting. When Robbie and I were preparing for this, we discussed how certain businesses, professional services, for example, if you're still working, you're still busy, your revenue may not be changing. If your revenue is based on a quantum of hours times, an hourly wage or an hourly amount that you charge, under the accrual method, your revenue may not have changed. However, if you're not collecting cash from your clients because your clients can't pay, then rather than using the accrual method of accounting, you may use the cash method of accounting to see if you qualify for this. There are certainly special rules in computing revenue when it comes to non-arm's length transactions. I mentioned at the beginning that it was really based on arm's length sources, but certainly if you have non-arm's length revenue, there are certain rules that will be looked at to see if that revenue applies. And as well for affiliated group of companies, you can look at revenue on a consolidated basis. One thing I want to mention now, and then we're actually going to go back to the previous slide, is that because this is such a massive, massive benefit, because there's no maximum to this. You can have 100,000 employees, and when you do the math, it basically works out to a $10,000 benefit per employee. You can have 100,000 employees and claim the $10,000 benefit for every single employee. There's no limit here. So the government has said that there will be very, very hefty fines and penalties for businesses that either make fraudulent claims, including fine or imprisonment, as well is that if an employer tries to artificially reduce their revenue such that they qualify for the reduction in revenue, the penalty would be that you have to pay back the entire subsidy plus 25%. Now, Robbie, if we can go back one slide. Okay, so I'm just looking at my my notes that I've made to prepare myself for this discussion. So one of the important points here when it comes to making the claim and calculating how much of the wage subsidy that you can qualify for is a reminder that this wage subsidy only pays out a maximum of $847 per person. And the government has said two things. One, that employers are expected, wherever possible, to maintain their existing employees' pre-crisis employment earnings, meaning that if you normally paid someone, I'll make up a number here, but if you normally paid them $2,000 a week and this wage subsidy is giving you only $847, the government would like you, again, we don't know what they would like you means, in that they want you on a best efforts basis to continue to pay the employees the pre-crisis earnings to the extent that the business can sustain. As well, there were also comments that if, for example, if a person's weekly wage was only $500, for example, or let's use 400, easier math. If their weekly wage was $400 and the government, because it's 75%, was going to kick in $300 for that individual employee, the government again says that the business must, on a best efforts basis, pay that additional 25% of the employee's compensation. Now, again, this one's very important because there's a special rule for employees that do not deal at arm's length with the employer. So this is going to cover the situation where you have a business in which you work in it yourself, you own the business, and you are also an employee. You may be an incorporated professional, doctor, dentist, lawyer, accountant, or you may have a business that has family members on the payroll. So number one, the subsidies here as well. So yes, non-arm's length people who do not deal at arm's length with the employer will be able to benefit. The employer will be able to benefit from the $847 per week. Again, it's based on the pre-crisis weekly remunerations. So it's not like you can all of a sudden jack up if you're paying a family member $200 per week and that's their pre-crisis remuneration. You can't jack up their salary to cover a higher percentage of money that the government will pay to you. And as well, it's only going to cover non-arm's length employees employed prior to March 15th, 2020. So as a result of this new benefit, you can't go and start hiring on all of your family members to take advantage of the $847 per week. Whereas if they are arm's length people, you can hire new employees to come and work in the business, but you can't hire new non-arm's length people. So that's all I was going to say on CEWS. Robbie, I know you're monitoring the questions. Did we want to stop for some questions now?
I think we're running out of time. So why don't you go through
the last one I have is actually I'll talk about CEBA and then we can come back to this because CEBA is going to be
well, unfortunately we're not going to be able to get to all the questions. We've got quite a number of coming in and a number of submitted prior to, so apologize to those if we don't.
Yeah, I'll be able to answer a bunch of these quickly, I think. Okay, so moving along, CEBA, or the Canada Emergency Business Account. So this is the program that you may have heard where the government is going to make, through financial institutions, loans of $40,000 to qualifying businesses. And the reason why these loans are so attractive is that these loans, there is no principal repayments required until December 31st, 2022. And there is no interest that is going to be charged until December 31st, 2022. And the icing on the cake is that if you repay 3/4 of the loan, so $30,000 before December 31st, 2022, then $10,000 of the loan will be forgiven and you don't have to pay it back. Of course, that $10,000 forgiven amount, we do expect to be taxable income to the business. But again, for a business that needs this money to pay its ongoing operating expenses, $40,000, the applications just went out, I believe last week. There's a $10,000 break at the repayment. There's no interest for 2.5 years based on where we are now. And if there are any outstanding balances, they'll be converted into a 3-year term limit at 5%. So again, as I mentioned, the applications are open now. I would say that most, not all, but most financial institutions are being able to facilitate these loans, and you have to go, or they would like you to go to your main bank where you operate your small business banking effectively. And it's key because they're saying that you had to have had a small business banking account at that bank, I think based on March 1st, in order to be able to qualify for this program. One comment I'll go through this and then I'll add my color commentary. So in order to make a claim, you have to be an operating company registered in Canada. You had to be actively operating as of March 1st, 2020. And this one is key. You had to have a payroll of between $50,000 and $1 million in 2019. So they're looking to capture what I would call small businesses, again, because that would have a payroll of between $50,000 and $1 million last year. And this one is key. You have to agree to use the funds from this loan to pay for operating costs that cannot otherwise be deferred, such as payroll, rent, utilities, insurance, and property tax. And it's important because when you actually go through the application process, there's lots of fine print. And some of the fine print is that the money cannot be used to prepay or refinance existing debt. You cannot use the money to pay dividends. You cannot use the money to make distributions, and you cannot increase management compensation. So many incorporated professionals, I believe, looked at this first and said, "Oh, this is a $10,000 gift from the government." But I think it's quite clear now that it is absolutely not intended to be a $10,000 gift from the government. Again, back to the question of how we're going to all pay for this, because there's a lot of restrictions on what the money can be used for. And in fact, what I would say is that many professional services firms that are formed as partnerships, the partnerships have asked their corporate partners not to apply for these loans unless the business is going to decide to have their corporate partners apply for the loans and then have the money lent into the operating business. So with that, let's see. I'm going to see if there's any.
I'll add one thing. This is not, and it says at the bottom of the slide, but not something that you should be applying for at every bank. If you bank with multiple institutions, then there's no double dipping, as was true with all the benefits if one per individual. And I know we're at the end of
Is it okay if we answer a few questions, Renee, before we finish?
Sure.
Sure. Okay, so let's
have another minute or two though, so only a few.
Okay. I'm gonna go and answer some of these quick questions here. Here's one. What if an owner manager gets paid a small sum each month and gets bumped up at fiscal year end? Can the 75% subsidy be claimed on the average monthly payment? No. So in that circumstance, you absolutely have to plan to make sure that if you want to take advantage of the $847 per week, you have to adjust your pay to make sure that you get the maximum benefit. You have to make sure that the owner manager is paying themselves at least the $847 per week to make sure that you get the benefit during this specific period. You can't do it based on averaging.
We got a question that says, are there any support programs for individuals who have been hurt by the significant decrease in the stock market? I wish that there were, because I'm sure that applies to everybody, but unfortunately not. The government's not compensating for that.
No. Here's another question. Does CEWS apply to part-time employees? Absolutely, CEWS applies to part-time employees. So again, it applies to the business that employs the part-time employees. That should not be an issue. Let's see here.
I know we're short on time. I'll answer. Okay, you go, Ali.
Okay, there's one, because I think this is important. It says, if I'm a sole proprietor, so meaning you're not incorporated, you have no employees, and I have experienced a substantial reduction in revenue due to COVID, do I qualify for the 10% wage benefit, the CEWS, or neither? And I think the answer here is you qualify for nothing, unfortunately. So this is the same as any self-employed professional. Not just a self-employed business person, but any like a doctor or a dentist who's seen their income go down. Because you are not incorporated, you don't actually pay yourself a salary because you're just a sole proprietor. And unfortunately, you can't then benefit from the 10%, the 75%, and you also cannot benefit from CERB if you still have money coming in, because you would otherwise be able to benefit from CERB, but you'd have to have no money coming in at all.
Robbie, Ali, I'm so sorry to cut you off. We've even had people email out thank you. So on behalf of UJ and the Jewish Foundation, it really is my pleasure to thank you both. You really obviously put in a tremendous amount of work into your presentation. We will be doing more webinars. We thank the 100 people who've been on the call. I'd also like to thank my colleague Igor Kozak for putting this together. He's done a terrific job. I'm sure you are joining me in clapping for him, although I can't see any of you. We wish everybody a wonderful rest of your Passover. Thank you again to Ali and Robbie, and have a great evening.
And if anyone has follow-up questions, Robbie, I think that we both said it's fine if you want to reach out to us, and we'll do our best to answer the questions for sure. Our email addresses are on the very last slide.
Sorry.
Thank you, everyone.
Thank
Everybody.
you.
Good night.